All right, let's dive into something that might just change the way you see the world, especially the world of finance. We're going to talk about a hidden geometry, a secret pattern that explains why the market feels so chaotic and why the tools we've been using to understand it just don't work. Okay, so first things first, we have a huge mystery sitting right at the heart of our global economy. It's a problem that's been tripping up the smartest people in finance for generations. Here's the thing. All our fancy financial models, the ones that run Wall Street, they're all built on this core idea that things are basically predictable and orderly. So why do they keep getting blindsided by events they swear should never ever happen? What is going on here? I mean, you've just got to look back at history, right? The Great Crash of 1929, it was a complete cataclysm. And the economic models of the time, they had absolutely no way to explain it, let alone see it coming. Fast forward to 1998, we see it again with the meltdown of a huge hedge fund, long-term capital management. The events that caused it were so statistically out there, so unlikely, that according to the standard models, they were basically impossible. And of course, who could forget the 2008 global financial crisis? Another one of these so-called black swan events that our systems were completely unprepared for. The thing is, these impossible events keep happening, and when they do, the consequences are absolutely devastating. So what gives? Are our tools just broken? Well, yeah, kind of. Let's dig into this, because the problem is baked right into the very foundation of how we've been taught to look at risk. You've probably seen this before, right? The classic Gaussian bell curve. It's this beautiful, simple, tidy model that says most things in life will cluster right around the average. It suggests that those really wild swings, the extreme events, they're way, way out on the edges. So incredibly rare that for all practical purposes, you can just ignore them. I mean, get this. According to this model, the odds of a total market collapse are about 1 in 10 billion. You are literally more likely to get hit by a meteorite. But we all know that's not how the real world works, don't we? Markets do collapse, and a heck of a lot more often than meteorites fall from the sky. And this is the core of the problem. It's a total disconnect. On one side, you have the smooth, orderly, predictable world of the bell curve, and on the other, you have the jagged, chaotic, unpredictable reality of the market. The map we're using just does not match the territory, not even close. So where do we find a better map? Well, funny enough, the answer wasn't waiting in an economics textbook. No, the clue was hiding in plain sight, in the patterns of the natural world all around us. It just took a whole new kind of math to see it. So back in the 70s, there's this brilliant maverick mathematician at IBM named Benoit Mandelbrot. He was fascinated by the roughness of the real world, things like coastlines and mountains that scientists had seen for centuries but could never really measure. So he decided to invent a new geometry to describe it all. He called these shapes fractals, from the Latin word fractus, which means broken or fractured. And here's the magic trick, the thing that makes a fractal so special. It's called self-similarity. It means if you zoom in on any tiny piece of it, you see the same basic pattern repeated, just on a smaller scale, over and over and over again. And this isn't just some abstract math concept. These things are everywhere, from the way a tree branches out, to the florets on a head of cauliflower, to the jagged path of a lightning bolt, even the structure of entire galaxies. This pattern is everywhere. You could say it's the geometry of reality itself. Okay, I know what you might be thinking. What on earth does a cauliflower have to do with the stock market? Well, as it turns out, everything. When Mandelbrot started looking at charts of financial data, like cotton prices over decades, he had this massive aha moment. The jagged ups and downs didn't look like a smooth bell curve at all. They looked exactly like a fractal coastline. A chart of daily price swings had the same rough character as a chart of monthly swings. It was the same pattern, just on different timescales. And this was a total game changer. It meant all those wild swings, the booms and the busts, they weren't just random noise you could ignore. No, they were an essential, built-in part of the market's very structure, all driven by repeating patterns of human behavior at every single scale. Now, this insight wasn't just theoretical. It led to real, practical tools that traders use. People like Bill Williams created indicators to spot these little repeating fractal patterns on their charts. For instance, a simple bullish fractal is this specific 5-bar pattern. You look for a low point that's surrounded by 2 higher lows on each side. The idea is that this tiny, self-similar shape could actually signal a major turning point in the market. So once you start to see the market this way, it completely flips how you need to think about risk and making financial decisions. It gives us a brand new lens to look at the market's wild, chaotic nature. So the takeaway here is pretty clear. Instead of using a map that pretends cliffs and deep valleys don't exist, fractal geometry gives us a much more realistic one. It's a map that acknowledges the chaos, that accepts wild events as a fundamental part of the system, not some weird exception. Now, Mandelbrot himself was always very clear. This is not a crystal ball. Fractals can't tell you the exact moment a market is going to crash. But what they do give us is a much, much more powerful lens to understand the kind of risks we're facing and the true odds of those extreme events. And all of this leaves us with one last, really provocative thought to chew on. We found out the bell curve was the wrong map for the financial markets. So, where else are we using the wrong map? In our society? In technology? Maybe even in our own lives? Where else are we trying to navigate a complex, wild, fractal reality with a map that's just plain wrong?